Bitcoin, could it serve the three roles of money? So means of exchange, what we use every day to buy things, store of value, like gold, and unit of account. Would prices be quoted in terms of Bitcoin? This is a new asset class, and most people will agree with that. We did a study on it. If this asset does not perform like other assets, in other words, it provides diversification for funds. And because it is behaving differently, institutions have to consider it.
Alden draws an interesting parallel between Bitcoin and currency carry trades. In foreign exchange markets, investors typically borrow in weaker currencies to invest in stronger, more stable ones. Bitcoin, she argues, is increasingly viewed as the strong currency in this dynamic, a form of hard money that capital seeks out when fleeing debasement or volatility. Institutions may not be positioned to custody Bitcoin directly, but that's no longer a barrier. With the rise of ETFs, Bitcoin-linked bonds, and other structured products, exposure is now accessible across traditional financial vehicles. This opens the door for massive capital pools, pensions, insurers, sovereign wealth funds to participate in Bitcoin's upside, without the operational friction of self-custody. As a result, Bitcoin isn't just a retail-driven asset anymore, it's becoming a core option in institutional macro strategy. Click this video to see what happens next. And before that, be the one who says I was here before 100K. I'm on a mission to hit 100K subscriber before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comment. Let's win and grow together.
This is a long-term investment. If we're right, according to our analysis. Now, this is our research, our analysis, no promises. We can't do that. But according to our research, the technologies around which we have centered our research and which have focused our investments, we believe will go up more than tenfold in the next 5 to 10 years. And that's how much explosive growth we have ahead of us as these technologies converge and create incredible opportunities for investors. What are some of the jobs of the future going to be? I think individual investors are going to be providing for themselves if they are investing on the right side of change. Learn what you're investing in, or learn why we've invested the way we have. Now that the world is moving so quickly into this new world, and Bitcoin has become so successful an investment, many people are trying to figure out, okay, how do I get involved with the new world? And when I say get on the right side of change, we think there's going to be a lot of disruption to the traditional world order. I think there's going to be a lot more customization and personalization and creativity explosion here. You know, it's interesting that this is happening when the demographic profile of the developed world is as it is. We have a very low unemployment rate in the US. I know the unemployment rates in Europe and the UK have been dropping to much lower levels than where they were stuck for years. I remember thinking, wow, double digits. We have a demographic issue. I mean, if you watch what Elon Musk worries about the most, he worries about the population implosion because collapse in population in the developed world, because we're not producing children above the fertility rate. We are setting up for a shrinkage. With China is going there, Japan is going there, and so we're going to need productivity to help us if we can't find human beings. Productivity is going to be essential. So as we're looking at real growth ahead, and when you think about real growth, you should be thinking, okay, somebody's benefiting from this. And I'm going to set up the number here by describing what has happened historically. If you look from 1500 to 1900, and you try and figure out what real GDP growth was back then, real economic growth. As best as Brett Winton, our chief futurist, in consultation with academics, can determine, it was roughly 0.6% per year. And then we had the Industrial Revolution. We had the internal combustion engine, telephone, electricity. And for the past 125 years, real GDP growth has been 3%. And most living standards have gone up over time. Some more than others, I know that's a debate, but most have gone up. As we look forward, based on the 5 innovation platforms around which we have centered our research and investing, if we're right, real GDP growth in the next 5 years could accelerate to 7.3%. And that gives you a sense of the economic activity, wealth generation out there. And when we are presenting to investors, we are actually presenting to them not only because they're investors, but because they have children or grandchildren who need to adapt to this new world. And our mantra in giving away our research, which we do, is get on the right side of change. We also do podcasts. We do a lot of outreach because we think this is a very important moment in time. Seize the moment, grab hold of these new technologies, because that growth rate is more than twice where we've been. And if you are on the right side of change, we think the opportunities are going to be enormous. Investment opportunities and job opportunities.
According to ARK Invest projections, real GDP growth could surge to 7.3% annually, an extraordinary acceleration, unlike anything in recent history. But unlike past booms driven by industrial expansion or physical infrastructure, this growth would be powered by software, advanced computation, and decentralized systems like Bitcoin. ARK places Bitcoin alongside artificial intelligence as one of the 2 most transformative technologies of our time. These forces aren't just creating efficiencies, they're rewriting the economic rulebook. Together, they are expected to unlock entirely new industries, radically reduce costs, and challenge the centralized structures that have dominated finance, labor, and governance for decades. This transformation is also intersecting with a major demographic turning point. In developed economies, shrinking populations and aging workforces are putting enormous strain on productivity. With fewer people in the labor force, economic output can only be sustained through automation, AI-driven systems, and decentralized financial tools. In this landscape, Bitcoin becomes more than just an asset, it becomes a pillar of resilience, efficiency, and innovation in a world that can no longer rely on demographic growth alone.
And do you think in 5-10 years from now that unemployment is going to be higher or lower?
In 5 or 10 years, let's assume we don't have a policy mistake and a recession. So just steady state. I think it will be the same or lower. And most of this is because those baby boomers are retiring.
So they come out of the employment.
They come out of the labor force, and the generations following them are smaller. Even now, what's happening is we're passing through the baby boom echo, meaning the children of the baby boom. That cohort was, I don't think it was any bigger than the baby boom population. So I think what's going to happen, and this will be very healthy for productivity, we're going to have a lot more experimentation and people taking risks on themselves. And maybe this idea of a corporation as we know it is going to change radically. You know, crypto is enabling distributed autonomous organizations. Just like Bitcoin, there's no one governing it, right? It's a distributed network. And, you know, let's see how these do and how vibe coding and AI integrate into the crypto, and I'm going to stop calling it crypto because it really should be called digital assets world, which legitimizes it more. Crypto sounds nefarious.
Yeah.
Digital assets is where, more than young people, and I'll say young people are spending more than half of their discretionary, their free time online. And so property ownership online is becoming more important. It's being legitimized by the way people are spending their time. I have many thoughts about this. Our government has become so bloated, it is scary. And our indebtedness is growing. And if we want to remain the reserve currency of the world, we're at risk of losing it. And on our tail is the whole digital asset world, right? Art Laffer, my professor, again, from USC, we had him read our first white paper on Bitcoin. Bitcoin, could it serve the three roles of money? So means of exchange, what we use every day to buy things, store of value, like gold, and unit of account. Would prices be quoted in terms of Bitcoin? Chris Berniski was our first analyst on Bitcoin, wrote the paper, Art read it, and, added to it enormously in terms of economic theory, which was great for us. And then he said to us, he said, "This is what I've been waiting for since the U.S. closed the gold window in 1971. A rules-based global monetary system, like Bretton Woods under the gold exchange standard." And I said, "Art, that's a very big idea. How big is it?" And he said, "Well, how big is the monetary base of the U.S.? Back then it was $4.5 trillion. And Bitcoin's market cap or network value was $6 billion. And I said, "Okay, that's a very big idea." And we were trying to get it into our portfolios. Regulators were hesitant, but I bought it right then for myself and haven't sold it. And I'm very happy with it. This is a new asset class, and most people will agree with that. We did a study on it. If this asset does not perform like other assets, in other words, it provides diversification for funds. And because it is behaving differently, institutions have to consider it because they're competing against each other. And if one puts it in, they all know they're competing against each other. So others have to consider it. And we believe that part of the opportunity has not been tapped. And just to put some numbers on this, right now, we're approaching 20 million Bitcoin outstanding.
Which means?
The number of Bitcoin that have been minted over time by Bitcoin miners.
So there's 21 million in total, right?
There will be, at the end of the minting process, 21 million. So we have only 1 million to go.
Yeah.
1 million would be, what is that? That would be $100 billion worth, a little more than that right now. So institutions really just started considering Bitcoin because the SEC gave the green light to Bitcoin with the approval of the spot Bitcoin ETF in January of last year. And it takes a while for institutions to do their research and commit. And so they're just now committing. And there's only $100 billion of new market cap that is going to be created, whereas they have trillions of dollars under management. And so we think there will be a lot of incremental demand. And to satisfy a lot of that demand, someone's going to have to sell.
Which means the price goes up.
which, yeah, if people don't want to sell, because Bitcoin's been awfully good. And our forecast right now, right now the Bitcoin's around 105,000. Our forecast for 2030 is $1.5 million. And we do that, the building blocks for that, the three biggest building blocks are institutional, which has barely started, store of value or digital gold. Young people are much more comfortable with digital gold than gold.
Cathie Wood believes Bitcoin's disruption of the global financial system is still in its early innings, according to her projections. If institutional investors allocate even a modest 0.5% of their portfolios to Bitcoin, the price could surpass $1 million per coin by 2030. This forecast is grounded in ARK Invest's analysis of asset flows, structural supply limitations, and the accelerating trajectory of global demand. As regulated access points like ETFs become more widespread, and confidence in fiat currencies continues to erode, especially in high inflation or politically unstable regions, Bitcoin's role as a core portfolio holding becomes increasingly difficult to ignore. Its scarcity, programmability, and independence from traditional financial intermediaries position it as a magnet for capital seeking long-term security. Wood envisions a future where Bitcoin doesn't just coexist with legacy assets, it gradually absorbs capital from them. In this view, Bitcoin isn't a hedge on the edges of finance. It's the next foundation. Click this video to see what happens next.